Volatility is coming, and you should not be surprised to see market swing in April. So here's the S&P 500 SPY ETF that I'm watching, which is basically getting narrow and narrow, contracting in this channel. This has been maybe the most hated rally in the history, maybe recent history at least, that never gave as much opportunity. Of course, it did have some sort of pullbacks, but if we bring up the moving averages, you can see in general, like compared to 2021, 2022, 2020, 2021 rally, you guys can see SPY from November lows, it has not tested its 50-day moving average. Versus if you go back, at least back here, it was giving some sort of an opportunity for bulls to enter, buy the dip, and ride it. But right here, right now, this is the longest run where people basically had to chase. But you guys can see that it's getting narrow and narrow. And option activity wise, I was noticing for the past 2 weeks, there's more demand now to sell calls versus selling puts. So there are more people trying to buy calls. This is SPY April 19th expiration date, maximum pain picture. On the left hand side, you can see the notional value of the puts open interest versus calls. It doesn't mean that stock market is bearish and people have bought a bunch of puts. It just means that there's a lot more puts about to be expired going into this date. And usually, well, all these puts are being written by the banks, by the market makers, by the funds to fund basically their stock purchases every week. And they have been doing it with 0 day to expiration as well. So usually what happens that most people don't get paid and these contracts expire worthless. And maximum pain for SPY 506 from its current levels, it's not a significant pullback, but I'm expecting pullback. Q1 is officially over. S&P 500 record highs. If you take a look at the individual component returns year to date, there are only 200 names in S&P 500 that are performing in line or above outperforming S&P 500. Everything else, 300 plus names underperforming S&P 500. And here's the heat map of overall year-to-date S&P 500 stocks. You can see Nvidia, biggest gainer, Meta, Amazon contributing a lot, financials contributing a lot, healthcare, energy. These stocks are doing very, very well. Of course, we have laggers such as Apple, Tesla, Adobe, Intel, Boeing got hit in pretty hard as well. So, but I'm going to be watching for volatility spike, considering also there's some appetite. I have posted it on my Patreon and Discord as well, that there's some appetite right now for the past 2 weeks or so to buy more SPX puts versus calls. Calls being sold significantly more, and they have been selling since basically the March expiration and before Nvidia event. Lots of calls being sold and lots of puts being purchased, because you can see market is not balanced when it comes to a lot of people don't have hedges, okay? And that's what happens when everybody is one-sided and they keep selling puts and they don't have they don't have protection. And as soon as market starts flushing, everybody runs and they will start losing on those puts that they sold. So I'm going to be expecting some sort of a pullback, not as significant, but at least 50-day moving average. Currently, it is not too far away. If we're going to see some sort of a correction back to this level, retest before earnings kick in, that would be not a significant pullback, 3.5% pullback. would put us in 50-day moving average territory. But we can definitely see a larger pullback. If you take a look at the this channel that I'm watching, we can certainly push slightly higher and push a little bit higher. If I bring up maybe standard deviations, ultra short term, maybe SPY can go all the way to 527, 530, and then flush back down and basically catch people off guard. VIX volatility, when there's super low like this, you gotta be careful, you gotta be hedging. But I think a lot of funds are not hedging as much as they used to. Everybody's on one-sided right here, right now. And guess what? When everybody is bullish, market tends to punish. When everybody is bearish, market tends to melt up. And right here, right now, the fact that VIX is staying low right here means there's not much of a demand appetite, maybe even capital to buy longer dated VIX puts because, again, capital, right? People don't have with zero DTEs, they're generating cash short term, ultra short term, and there's not much of an appetite. But as soon as it starts moving, that's when people will start rushing in. But right here, right now, 13, that's the VIX level. You got to be cautious when market is calm, when everybody is chasing everything. You need to be contrarian and cautious, and that's what I'm doing right here, right now. Watching market for some sort of a correction here. Pullback, if not correction. Technically speaking, 10% would be a good correction, but I don't think we're getting it anytime soon unless we have some sort of market credit event or something like this. But another thing I want to mention here is the inflation adjusted level of the S&P 500. So you guys can see 2021 5,300. Currently we are 5,250. So technically speaking, we're doing double top. We're not at all-time highs considering inflation, right? Considering from 2021 all the way to 2024, inflation has been crazy. So we're there. So we could be forming double top, and we can see some sort of retracement before taking out this level after election. But this is what I'm watching as a resistance as well, ultra short term. And I already show you guys that the maximum pain, and I want to show you the notional value. So in general, this is S&P 500 total option, basically open interest. There's monthlies mainly, and it's not going into ultra daily zero DTEs that are ultra short dated, but you can see right here that total call volume 5.7 million versus put volume 14.5 million. That means, yes, market makers, banks, anybody, funds, basically on the melt up, they have been selling calls, and that's what they do. In a bull market, people sell puts, and they buy calls, fund their calls, and they buy assets, and they keep buying assets, and they keep selling puts. So you guys can see clearly market is on one side, and if anything, any surprise, we can come down very, very quickly. So in short, I'm going to be watching market for some sort of a volatility. Highest VIX this year, print 18. So I think we can go higher, all the way to 20s, maybe even higher than that. If stock market basically officially earnings kicking in start, there are going to be some earning cracks that market will punish quickly, and you can see bigger pullback going into May. So that's what I will be watching, and there's going to be a lot of 10Q quarterlies coming out from all those investors, funds, what they have done in Q1, what they have sold, what they have added. So it will move the market. So get ready for volatility. That's the update going into a long weekend. Hope you guys are having a good weekend. See you in the next one. Peace.